Here's your mortgage minute for June 6, 2025. Fixed rates are climbing, delinquencies are rising, and the Bank of Canada is walking a tightrope. Here's what you need to know this week. The Bank of Canada held its key policy rate steady at 2.75%, but the bigger story is what's happening in the background. From a record trade deficit to rising unemployment, the economic signals are growing louder, and they all point to an economy losing momentum. Canada's merchandise trade deficit hit a record $7.1 billion in April as exports plunged 10.8%, the sharpest drop since the early pandemic. CIBC and BMO both now expect the Bank of Canada to cut rates in July and September, citing the trade drag as a major headwind for quarter two growth. On the labor front, Canada's unemployment rate rose to 7% in May, its highest level since 2016, excluding the pandemic. Economists say this slow grind in employment is another clear reason for the Bank of Canada to ease policy in the second half of the year. Meanwhile, mortgage lenders continue to inch rates higher. RBC pushed its 5-year uninsured fixed rate up to around 4.49, and other lenders have followed suit. Shorter term and variable rate options remain, but the window for competitive fixed rates may be narrowing, especially as bond markets remain volatile. We're also seeing major movement in the mortgage market itself. According to Equifax, renewals and refinances surged 57.7% in quarter one as borrowers rushed to restructure. Nearly 30% of Canadians switched lenders in search of better terms. At the same time, Ontario's mortgage delinquency rate jumped 71% year over year, a sign that rising payments are beginning to strain household budgets. Home sales fell across the country year over year in May, down 13% in the GTA, 17% in Calgary, nearly 19% in Vancouver. But listings are up in all three markets, offering buyers more leverage and holding prices in check. It's not a crash, it's a correction to more stable footing. This is the most strategic window we've seen in years. Rates are still high-ish, but policy is likely to shift soon. If you're buying, renewing, or refinancing, now's the time to review your plan, not wait for the headlines to catch up. If you're thinking about buying, refinancing, or doing anything with your mortgage and want someone to look at it for you, please give me a shout.